In an unexpected end to the bidding war on U.S. steel that was started by Cleveland-Cliffs, the iconic American company founded by J.P. Morgan and Andrew Carnegie more than 100 years ago, agreed to a $14.1 billion takeover by the Japanese company Nippon Steel. This deal would give Nippon Steel a strong foothold in the American steel industry, an idea that didn't go down well with U.S. steel workers, politicians, and even the White House. Join us as we explore this deal, from why Nippon Steel is so eager for it to happen to how U.S. Steel became an acquisition target in the first place. Then, we'll talk about the opposition the deal faces, which indicates the long road in front of the two companies who want to make the acquisition happen. Hello and welcome back to PSD Markets. United States Steel has recently agreed to be acquired by Nippon Steel in a $14.1 billion deal that would give the Japanese company a major role in the American steel industry and end the independence of one of the oldest industrial companies in the United States. The $14.1 billion valuation at $55 per share represents a nearly 40% premium to U.S. Steel's closing stock price on December 15. The news of the takeover caused X stock to soar, jumping nearly 34% since the announcement until now. On the other hand, Nippon Steel shares fell more than 3% in Tokyo trading a day later as investors were skeptical over the acquisition being too big to handle. The takeover would allow Nippon Steel, already one of the world's largest steelmakers with a production capacity of 66 million tons a year, to increase that capacity to 86 million tons. This would make Nippon Steel the world's second biggest steel producer behind China Baowu Steel Group, which has an annual capacity of around 125 million. Additionally, the acquisition would bring Nippon Steel one step closer to its goal of 100 million tons. The deal is set to be one of Nippon Steel's largest acquisitions ever, aimed at strengthening the company's position in the growing U.S. market, especially in its growing EV sector, in the midst of declining demand for steel products in Japan. The acquisition would give Nippon Steel access to specialized steel used in electric vehicle motors in the U.S. This specialized steel is referred to as electrical steel, which is currently a niche segment that accounts for only about 1% of global steel production, but it's expected to rise quickly as more auto companies produce electric motors for EVs. It's expected that electrical steel used by the auto industry in the U.S. will primarily come from U.S. Steel as it increases its production at its Big River Steel facility in Osceola, Ark, which the company acquired in 2021. This facility is expected to produce up to 200,000 tons a year of the steel used in EVs. This would present Nippon Steel with a great opportunity since the U.S. EV market is massive and growing rapidly. It was valued at $49.1 billion in 2022, and it is anticipated to grow at a CAGR of over 15.5% between 2023 and 2032. According to the two companies, the deal is expected to close by October, as they're waiting for approval from U.S. Steel's shareholders and regulators. Ichi Hashimoto, the president of Nippon Steel, said that by acquiring the American steel company, Nippon Steel will become a free world champion in an industry dominated by China. If you're wondering why U.S. Steel became an acquisition target in the first place, you should know that the company started attracting acquisition interest after some short-term challenges, which included upgrading furnaces and potential car production shutdowns due to labor strikes in the auto industry, took their toll on the company's valuation. U.S. Steel's market value, including net debt, was equivalent to 3.6 times its projected 12-month EBITDA. When compared to its peers in the industry, we see how undervalued the company is. For example, Cleveland-Cliffs, North America's largest supplier of iron ore pellets to the steel industry, has a market value equivalent to 5 times its projected 12-month EBITDA, while other companies like Nucor Corp and Steel Dynamics Incorporated trade at 6.9 times and 5.8 times respectively. This discount, along with the desire to eliminate competition and grow market share, caused Cleveland-Cliffs to make an acquisition offer in July of this year, and it was followed by another company called S-Mark Inc., which valued U.S. Steel at 6.2 times its 2024 EBITDA. And so, U.S. Steel, the company founded 122 years ago by J.P. Morgan and Andrew Carnegie, found itself evaluating various offers for its business since August. The company had to navigate a bidding war that was started by a $7.25 billion offer from Cleveland-Cliffs. Cleveland-Cliffs dominated the domestic supply of the steel that is used in transformers, and the company saw an opportunity in getting into electrical steel by acquiring U.S. Steel. However, this deal raised many antitrust concerns as it would have moved 100% U.S. blast furnace production under one company. Not only that, it would have also seen 100% of electrical steel production in the U.S. consolidated under one combined company. So it's no surprise that this was a major source of concern for the auto industry. In fact, the Alliance for Automotive Innovation, which represents automakers, wrote a letter to Congress in October in which it rejected the proposed Cleveland-Cliffs U.S. Steel deal. This is because having just one supplier of electrical steel would have led to increased costs and therefore slow EV sales. On the other hand, Nippon Steel's acquisition could be more favorable to automakers because it would not monopolize the U.S. supply of electrical steel. Automakers could view this acquisition as a positive thing, as increased competition between suppliers is a good thing for buyers. Even though the deal could benefit automakers, many U.S. Steel employees feel the exact opposite about it. The United Steelworkers, who represent about 11,000 hourly production workers, aren't happy with the Nippon deal. The union's president, David McCall, said in a news release that the deal demonstrates a greedy, short-sighted attitude that has guided U.S. Steel for far too long. He also said that neither U.S. Steel nor Nippon Steel reached out to the union regarding the acquisition, which was in itself a violation of the partnership between the union and U.S. Steel, which requires the company to notify the union of a change in control or business conditions. In their response to the union, U.S. Steel and Nippon Steel said that they would honor existing contracts with union-represented workers and that the companies agreed on the importance of investing in employees. A perfectly diplomatic reply that doesn't showcase the amount of opposition the deal faces. In fact, the workers aren't the only people hating the deal, since it's also facing opposition from American politicians that don't want a foreign firm to take control of an American company. These politicians included Democratic Senator John Fetterman of Pennsylvania, the state known for its steel, who immediately vowed to do everything he can to stop the deal. Additionally, Republican Senator J.D. Vance said U.S. Steel remains critical to the American defense industrial base and warned about the future implications of the sale for the American people. But the most dangerous opposition of all comes from the White House. According to Lael Brainerd, director of the National Economic Council, President Joe Biden believes that serious scrutiny is warranted for the planned acquisition in terms of its potential impact on national security and supply chain reliability. Brainerd also said that the deal would be reviewed by the Secretive Committee on Foreign Investment in the United States, and the committee will carefully investigate the acquisition and see if it threatens U.S. interests in any way. But do these concerns actually make sense? While it's true that the Biden administration promised to exert more control on foreign takeovers, the president's main concern is probably China, especially because of the U.S.-China trade war that started a few years ago. The new statement from the White House comes before the elections next year, and Biden must have known that staying silent on an acquisition of an iconic American company by a foreign firm wouldn't be a good look as he runs again. In addition to that, U.S. Steel's equipment isn't being relocated to Japan, and aside from the electrical steel used in EVs, there's nothing new in steel technology that could raise concerns of intellectual property theft. What's more, the U.S. has had foreign owners, including Japanese, of some steel assets for decades, and many foreign automakers in the U.S. employed hundreds of thousands of foreign workers in U.S. plants with no problems. With all of this in mind, these political concerns make no sense. However, this strong opposition to the deal indicates the harsh battle U.S. Steel and Nippon Steel will have to fight to overcome these obstacles. As for X stock, investors who bought it previously are probably over the moon right now. Since the acquisition will happen next year, it might be a good idea to hold onto your X shares, especially since an increase in its price could happen between now and when the deal closes. The two management teams behind the companies believe that there won't be any major regulatory issues at play, and this is of course something we have to watch out for. However, the Committee on Foreign Investment in the United States is unlikely to block the deal anyway, since its main concern is national security, and Japan is a major U.S. ally in a critical region. Nippon Steel's acquisition of U.S. Steel is a controversial deal that will end the independence of one of America's oldest companies, so it's no surprise that it's facing opposition from union workers, politicians, and the White House. However, it's unlikely for this opposition to actually harm the deal, since Japan is a major U.S. ally in a very critical region. So it might be a good idea for investors to hold X stock, since it could see more increases from now until the deal closes. That is everything for now. What do you think? Could the deal still be blocked? Are Nippon Steel and U.S. Steel too confident about it? Please let us know what you think in the comments below. And if you haven't, please subscribe and leave a like for this video. Your support helps us continue our work. Thanks again for your support, and I will see you in the next one.